What's good, people? I just wanted to preface this video by saying the first 10-12 minutes of this video is fairly slow and it's just me waffling about how I'm going to move forward on my funded account. So if you're just watching this video to see me place trades because you've heard me talk about my channel, or you've seen my channel and you know it's about trading and you're interested in trading but you're not interested in the ins and outs, skip the first 10-12 minutes. However, if you want to understand the ins and outs of what I'm talking about in relation to my previous video of first episode 1 of mastering the markets, then I'd suggest you watch the first 10-12 minute clip, as it gives some sort of context as to things I talk about further into the video. However, like I said, if you're just here because you hear trading, you see me and you know me, and you know trading is essentially making money, losing money, you want to see me lose, you want to see me win. If that's all you're here to watch, like I'm saying, move to the first, or skip the first 10, 12, 13 minutes of the video to get into me explaining why I'm placing trades, what trades I'm placing, when I lost, when I won, and yeah. Manners and respect, people. Hope you enjoyed the video. Like, comment, share, subscribe. Any sort of love to the channel, I appreciate it a lot. Like I said, I want to document my journey, my losses, my wins, be completely transparent, explain the whole process to you, and see where we end up in the next 2-3 years. I've already been doing this for about 3.5, 4 years now. Just past 4 years actually, because we're at the end of this year. Yeah, I started 2024 or 2020, at the end of 2020, started taking it properly serious, or more serious, about a year and a half ago. Is when I decided, you know what, nah, I'm actually gonna try and make something shake from this trading thing. Before, you know, when you're doing something to improve your life, or trying to get into a new hustle, and you think you're taking it serious because you're putting time into it or you're showing up every day, but you're not really locking in. That's where I was at before. A year and a half ago, a year ago, I fully decided, said, yo, boom. I got very far, just not putting 110% in or 100% in every day. And now I said, you know what? A year and a half ago, I said, let's lock in. So I truly believe that in the next 2-3 years, we'll get where we need to be with this thing. Even shorter than that, but I'm thinking long term in terms of actually making it from this stuff. And I want this whole document to be here, or documentary, or whatever you want to call it, the document of my journey to be here. So that's why I'm doing this. If this is the first episode you're seeing, I'm saying this again. I said this in the first episode, episode 1 of Mastering the Markets, because I just want the first few episodes people to understand that this is what I'm doing. I'm not sitting here telling you place the trades I'm placing. I'm not even doing it like that, because I'm uploading the videos a week, 2, 3, 4 weeks after I place the trade. So it's not like I'm saying get in this trade, take this trade. This is me saying this is what I'm doing, this is what I have done, this is what I am going to look forward or look to do in the next week. For example, with my market updates that I'm going to be releasing some Sundays for what I want to plan to do the week ahead. But yeah, like I'm saying, win, loss, break even, I'm going to show it, and I hope you stick around for the journey. Love.
Yo, what's good, people? It's your boy, Mr. Maintain, fam. That's what my thing's gonna be, fam. My thing's Mr. Maintain. I'm Mr. Maintain. Some of you will know that from either one of my TikTok pages or my Twitter accounts. I'm Mr. Maintain, Ethan Harbius Wiltshire, and I'm here today to talk about the next stage for my trading journey, essentially. So today I'm recording this the day the first episode of my markets Mastering the Markets Inside and Out comes out, episode 1, season 1. I'm recording this the same day that comes out. It's currently 1:30. That video will come out at 7:30. But I'm just getting ready to record the new, because what I'm going to do, I've got a plan on how I'm going to record each of these episodes. Basically, every time I come to trade, I'm going to start recording. Or every time I place a trade and there's something substantial to talk about, I'll record so I can document the whole journey and all of my trades, everything I'm doing can be put in the Mastering the Markets Inside and Out series. Anyways, today I'm here to speak about my next move. In the last video and the last episode, you saw I got denied a payout from my account due to the fact that I broke a consistency rule. A consistency rule that didn't really make sense. Simply, is it bright if I put the light on? It's a bit better. Simply because the rule doesn't make sense, because it's essentially, I'll explain it again. Lot size max rule. during stage 1 and stage 2 of your funded account, they will take the average size that you use for the trade, and then they double it. So let's say your average lot size was 0.2, and they double it. So your max lot size now that you can enter on the funded stage is 0.4. Then they divide it by 2 to get the lowest size that you can go in, and then so it'll be 0.1. The problem is, after I passed stage 2 and got funded, I changed my strategy slightly. I started swing or intraday trading, scalp trading Euro USD. Now, because of this, I'm entering off of supply and demand zones, and my stop loss now is sometimes 4.5 pips because I'm no longer swing trading, or I am swing trading at the same time, but I'm no longer just swing trading GBP JPY. So because when I'm swing trading GBP JPY, my stop loss is like 70 pips, my lot size on those trades is going to be much smaller to equate for risk, right? It's basic knowledge, basic understanding. However, now because I'm entering on the same account, I'm intraday trading, scalp trading as well, Euro USD. I'm entering off of London session high, sweep of liquidity, for example, break of structure, and then a retracement back into a supply or demand zone, for example. My stop loss sometimes is 4.5 pips, which means now my lot size can be much larger, and it still equates to the same amount of 0.5 or 1% risk, whichever I choose, which then determines the amount of lots I use. But now let's say my stop loss or my lot size on GBP JPY, my average used to be 0.2. But now, which means the max I could do, because they times it by 2 to find out the highest you can use on the funding stage, the max I can now enter a trade is 0.4. But because I'm entering on a much smaller stop loss now with Euro USD, you understand where the problem comes. I entered a trade with like a 1 lot or a 1.5 lot, and this breaks the consistency rule, the lot size consistency rule, which makes no sense because I'm still risking 0.5 or 1%. I'm not over risking, I'm just using a larger lot size or a different lot size, still trading with good risk. So my payout got denied for that reason. That is the most... Nothing else could have happened that was like more annoying than that, because if I traded during news, okay, I understand. In the 4-minute window, I understand. I broke a rule that is in place for a specific reason that makes sense, and I should have been attentive to that. But this rule really is great in my bones, because now I can't even continue trading that same account with on your USD scalping. I can't scalp on that account anymore. I have to just do what I did during stage 1 and 2, which was swing. But the reason my trading has got much better now, and I'm a better trader, is because I'm scalping Euro USD, which means now I can't risk the same amount that I was, because so now essentially I have to just do everything so much slower. Because my max lot size now is whatever it was, 0.4 lots is the max I can use for that trade consistency rule. If I use that max lot size and calculate my risk based off of that 0.5% at however much, you understand what I'm saying as a trader, I'm going to be making, instead of risking 0.5, or let's say instead of risking 1% to make 8%, which is some of my trades have been because of the way I'm trading now with limits, I'm now going to be risking, let's say for example, because I can only use 0.4 lots, I can only risk, let's say for example, so much more. I can only risk like 0. Or 0.1% of my account, 0.2% of my account to make 1%. So it's now messed with the whole, it's just going to make the process take so much longer. Because my consistency is there. It's just you understand how that just won't really work long term if I actually want to make percentage or financial gain from this long term. So I'm thinking I'm gonna have to buy a new funded account without that rule, past stage 1 and stage 2. It's a bit stressful, but I know I can do it now. I got the proof. The proof is in the pudding. I've done it before. I've done it on this account, so I should be able to do it a bit more efficiently on this new account that I'm gonna buy. It's just a bit sad that I thought I was going to get my first funded payout and run into this wall. It's a hurdle that we must jump over, but as I said in that other video, it's an opportunity to become a better trader, an opportunity to grow. So this is something I got to take to the chin, keep my head up, puff my chest out, and keep it going. So this is just, I just came to record this to say this is my next, this is where I'm going with it. I'm going to buy an account with a new prop firm and get the party started. I don't know what to do with this old prop firm now, because I don't know if it's worth still trading it. I've got the ability to make money on it. I don't know if it makes sense splitting my attention between something that isn't going to make me as much money. I can make a small amount of money now, probably consistently, but it would delay my ability to make a decent amount of money sooner. Because if I just focus on the other account that I'm going to buy, I might be able to pass it sooner, get funded sooner, make a payout sooner, rather than splitting my attention between that account and this account. So I'm just in the thought process stage right now, figuring out what's the best for myself in terms of doing this. As you can see, it's a bit hard to talk about and keep myself upbeat about, but it is just a journey. This is the life I chose when I decided to become a trader, and this is the life you're going to choose if this is what you want. So you got to get used to these kind of things happening. Obviously, you could say that I could be attentive of this. This is another thing that's a problem. This rule, I didn't see this rule when I was reading the rules 4 months ago. The last time I checked the rules, I didn't see this rule. Maybe they added it since then, maybe they haven't. But it doesn't really make sense as a rule, because my risk, it should be a problem with risk. You shouldn't be able to increase your risk, not your lot size, because your lot size doesn't determine your risk. Your stop loss determines your risk, essentially. Your lot size does determine your risk, obviously, because you're risking more. You're entering the market with a higher position, but you understand what I mean when I say it's your stop loss that determines your risk. Because if you're a good trader, your stop loss determines your risk. Your lot does not determine your stop loss. Do you understand? Your lot size does not determine your stop loss. Your stop loss determines your lot size, and you can't trade consistently if you do it that way. If you don't do it that way, because I know a lot of people that will be like, "Oh, I'm going to enter this trade with one lot." Thinking to myself, you've got an idea of it, but you want to make money so fast that you're thinking, "I'm entering a trade with one lot." You're not thinking, "Where's my stop loss going to be?" Because if you say, "I'm going to enter a trade with one lot," where are you getting out at? Like, what position you're getting out. If you don't know where you're going to exit the trade, your risk is still freelance. Your risk is still open. Price can move 20 pips and then you close, or price can move 5 pips and then you close. So this is what I mean when I say this rule doesn't really make sense, because I haven't over risked. I haven't been inconsistent with my risk. My risk has been consistent. They're just not allowing me to get this payout because of a stupid lot size rule, which is what it is. But manners, man, we'll get into the next clip and see what I want to see this week. Maybe, actually, I'm going to end this clip right now. Yo, what's good, people? I just entered another trade after how I said in the last clip, how I was going to see if I could trade this account still and get a payout so it doesn't go to waste. I've just entered a trade on USD JPY. The reason I've entered this is because higher time frame analysis shows obviously we're clearly bullish. The US election just happened, which means that the US dollar's got a good strength because Trump's in power, and for the meantime, I'm expecting things to continue upwards. On top of that, US unemployment claims came out good for the US dollar today. So then I noticed that we've had a sweep of London session lows. During New York session, we've created break of structure to the upside. Then I've entered on a literal 1 minute demand zone. Got tapped in nicely. We had the break of structure after the liquidity sweep. Like I said, we have a change of character here, break of structure here, demand zone, bish bash boss, simple stuff. On top of the fact that I'm swing trading this, we had this push down to this resistance or this support level here on the 78 extension, which we then printed a very strong hammer candle on the 1 hour. So I got in with intraday strategy. However, the trade is still overall a swing trade, so I've got a lower lot size on this, so I can adhere to the rules and see if I can get a payout. But I don't want to keep this clip too long because these videos are going to get really long. That's what I got into today. I'll give you an update of this if this hits TP or stop loss.
So we lost the trade, bro. I ain't even gonna lie. We lost that shit, bro. But I'm not too stressed because, like I said earlier in the video, I saw everything I wanted to see for this trade. Unfortunately, it didn't play out for us. I still believe in the direction of market overall. However, I'm gonna take my time to get in at a better point. I think last week I was struggling a little bit, to be honest. Now I look at it, I was struggling a little bit with the fact that I wanted to trade and I wanted to prove to myself that I could get a payout after everything that happened. Watching the last video, if you haven't seen me getting denied my payout from a really, really stupid rule. I think a little bit of psychology got to me in terms of I want to trade. I saw all the reasonings for the trade and why it made sense. However, now looking back on it in hindsight, if I'm actually looking at this market, we can see, and I can see in hindsight, that we were kind of overbought. We were overbought, and I wanted to get in to come to this next zone. However, we were overbought, and we did need to see a retracement before we can go back up. So I'm hoping during this week, I can get some form of a trade like this. I'm talking about direction, not exactly like this in this exact place. We got stopped out, bro. What you can do about it, man? Ain't nothing you can do about it, man. These things happen, and it is what it is. My girlfriend's texting me, probably saying that do I want her to get anything before they close? Yeah, before they close the tills, do you want me to get anything? So I'm gonna go respond to my girl, and I'll see you in the next clip, man. Yo, people, this is like probably a week and a half, maybe even 2 weeks later from the last clip you just saw. It's currently 1:30. I'm about to trade New York session. However, I haven't traded much since the last Master of the Markets episode, simply because number one, there hasn't been many opportunities, and number two, there's been too many opportunities for me to overlook on the crypto side of things. So I haven't really been trading the forex markets much. I took 2 losses on USD JPY, and I started trading USD JPY because I believed after the election there would be some good opportunities. However, I took 2 losses, and I missed out on another trade that would have ended up being a third loss. So now I'm down 2.5% on the funded account, and I've decided to get rid of, as you can see, I've decided to get rid of USD JPY from here and go back to just Euro USD and GBP JPY, which is what did I say Euro JPY? I've gone back to Euro USD and GBP JPY because that is what I've had most success with in my trading career. I just come to do this video real quick, basically to just say I'm getting into a trade on Euro USD. We've come into this 1 hour or this 30-minute demand zone, supply zone over here. We've tapped into that. We've also taken out yesterday's New York session highs. Then following that, we had a push down, a change of character, a break of structure, and there's a 5-minute fair value gap here. I've placed my a sell limit on, put my stops above the 1 hour supply zone or 30-minute supply zone, and we'll see what happens to this. If this hits TP, I will be back to break even on the account. I think I'll be in slight profit on the account, and I may be able to request a withdrawal. I'm not too sure. I'm still deciding whether I enter this trade with 1% risk or 0.5% risk. If I enter 0.5%, then I will be back to break even. If I enter 1% risk, I will be eligible for a payout. However, remember I said to you guys, I couldn't understand why that lot size rule was a thing and the reason why I got denied my last payout. However, I've thought of something. It's a lot size rule. It is nothing to do with how many trades you can have open. So the max lot size I can use on this is 0.23. However, if I wanted to enter a trade on Euro USD, which I couldn't before because of the lot size rule, which means I would only be able to risk like 0.3% to make 0.9 or 1% if I hit a 1 to 3 risk to reward ratio trade, I can just double up on the trade size. So let's say I meant to enter, let's say we go to, 1 second, let me open this up and refresh the page. Right screen, let's say we go to the lot size calculator. Let's say your account balance is 10k and you want to risk 1%, your stop loss is 7 pips because your swings or scalp trade in Euro USD. It's a 1.42 lot that you enter. What I'm going to do is I'm going to break that 1.42 lots. The maximum I can enter lot size on my funded account is 0.23 because of that lot size consistency rule. What I'm going to do is I'm going to take, if I had to enter 1.4, I would take 1.4 and divide that by however many times I need to get under 0.23. And then I will just place 4 trades, for example, or 5 trades that are 0.22 in order to abide by that lot size calculator rule, or that lot size max rule, but also still be able to enter the same position with an adequate amount of risk to where it's worthwhile for me. So I figured out how to get around that, and as I can, here, this is what I was talking about. I was just talking to myself. I didn't even bring the chart back up. But yeah, so if we 1% risk, 7 pip stop loss, blah blah blah. Yeah. Now I just sit here and waiting for this retracement into this fair value gap and this supply zone once again to get tapped into the trade, and I will update you on the turnout of this. Yo people, what's good? I can't quite remember. Why am I showing so much chest for? I can't remember what the last clip was I recorded, because I haven't traded much in the past week and a half, 2 weeks, because I've just been trying to catch some like 1,000, 5,000 X's on Phantom with the meme coin stuff. Now that that's kind of died down and the TikTok meme coin meta's out of the way, I can focus on trading again. It just made more sense to me. I looked at the whole situation as a trader, and I thought to myself, if there's potential for me to turn $5 into 100k or 10k, $500 trading crypto, because I was thinking of trying to do it like as smart as you can be with meme coins. Instead of trying to say, let me turn $5 into 200k, my idea was turn $5 into $300, then turn $50 of those dollars into a rack, and blah 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 like that. However, it didn't go as planned. I made some good decisions, very good decisions. I turned $10 or $100. I split that into actual proper investments in Phantom, like XRP and them things. And then I added more later, because I sent money to my Phantom wallet, $100, and I said, cool, this $100 is all I'm gonna use for this meme coin stuff. However, I already had $65 in my wallet, in my Kraken wallet, from a couple like months ago, maybe a year ago or so. So then I sent 50 of the original dollars to a different wallet, or 100 of the original dollars to a different wallet, and just held XRP, and I split it into something else as well, just as actual investments, to start sending money to the investment account every month. So I think I split $100 between like 3 cryptos, and I'm gonna do that every month. So I left myself with $50 in my Phantom wallet, and I turned the 50 in a matter of like a week. I turned the $50 of Solana into just under 2 Solana. So I had, and that was when just over 2 Solana. At one point my wallet was at $600, and I was being smart up until that point. I was being smart, cashing out, not letting something ride and then dip. I was cashing out. If I turned $10 into like $100 or $50, I was cashing out. I was just taking the wins, thinking of it like a trader. Realistically, I just caught a 1 to 5 RR trade. Do you get what I'm saying? I'm tripling or I'm quadrupling my money, whatever you want to call it. So I thought, let me take that. And then I started seeing bigger numbers, and I was like, what if this rides to like 10k? Long moral of the story, the one that I was holding is now down in the dumps. I'm still holding it now, hoping that we can come back, because I'm not going to sell it at a loss. I'll hold until I officially all lose. All out of money, for example, in the wallet. But now I'm back trading, and like I said, I'm not sure what the last clip was. However, let's just get into this, because currently I'm up on this trade, which brings me to minus 1.5% on my funded account. I was minus like 4%, 4.5% before this trade. So technically equity, I'm still minus 4.5%. However, this trade will bring me to minus 1.5% or like minus 1%, because it will make 3.38% if it hits TP. I'm about to move stop loss. To break even, and then even into profit. I'm gonna move my stop loss down below this point here, just because it's underneath a 193, 250, the psychological zone. That's what I class those. Every 25 pips. Is it 25 pips? Just make sure I'm not capping. That's 75 between 500, 192, 500 to 193, 250 is 75, which means every 250 you see here is 25 pips, and that's a psychological level that I use to get in and out of trades on GBP JPY. So I'm gonna move my stop loss underneath there in profit, so I can't lose anything. Worst case scenario, I make like 1-to-1 RR, so I make 1%, which is calm. Like I said, I don't know what the last clip was, so I'm gonna leave it there. The reason I got into this trade, however, actually, the reason I got into this trade, my bad for that quick cut. Basically, I brought up my Notion, which is what I use to trade, track my trades, and I showed like my account number and everything like that. And I don't know what stuff I can and can't show yet as a trader, if my trading account will get hacked or whatever. So bear in mind, that's why I did that. What was I talking about? I was talking about why I got into this trade, and the reason I got into this trade is because, as you can see here, if we go to the 4-hour time frame, I swing trade GBP JPY and I scalp GBP USD and Euro USD. We have a head and shoulders pattern here, very clear, very, very clear. We broke the neckline up here, which also at the same time broke a psychological level. We came back down to retest. I believe I had my, what did I have? Yeah, I had my London Open here. I had my New York Open here. And it technically lines up, this trade lines up with my swing trading strategy, and also at the same time I had the added confluence of, if I wanted to scalp this trade, I could have caught a scalp entry, which is how I entered this trade. Because basically we came up, this is London session, this is New York session. We came up past London session highs, which would have been here. We pushed past the London session highs. We came back in to this fair value gap, which was formed here, 30-minute fair value gap, I believe. Let me just see if I'm capping. Yeah, 30-minute, or it was a 15-minute fair value gap that we got tapped into. And then, which also lined up with the London session being broken and a liquidity sweep or something of the sort. In tandem with that, we had a 50%, we came into equilibrium at 50% of this initial push and this retracement. So I entered on the break of structure here, just here. I think I got in on the 3-minute break of structure, I believe. I'm not too sure. I think I got in preemptively here when this candle closed, which I would have waited for this candle to close, which is maybe what I done. But as I said, I entered this trade. When was this? I entered this trade on Monday. It is now Tuesday at 6:47. So it's been over a day I've been in this trade. Gonna let it ride, see where we end up, and yeah, that's the reasoning for that trade. Break of structure. The EMAs, the 50 EMA, we were also bullish. On the daily, the 4-hour time frame, and then I'm riding the trade up to the almost 194,500, which is some buy side liquidity on the 4-hour time frame, as you can see over here. I would go up here for the buy side liquidity, all the way up higher. However, because this is true buy side liquidity right up here, which is where liquidity will be swept and then we might head down. However, I always like to be a little bit conservative and come a little bit lower than where the liquidity sweep is, just on the off chance that we might push up to that area and aim to push up to that area, but not take it out fully, if that makes sense. So TP's around here. I could bring it up to 500 and that would still be safe. However, I'm more comfortable taking it around the same zone as the top of this wick before the actual buy side liquidity. So that's just why I've done that. And yeah, man, I'll see you in the next clip or in the next episode, because I believe I'm going to upload this video very soon, as it's now December the 10th, and I was going to upload a video at the end of November but didn't, because like I said, not many trade opportunities. Manners and respect, people. I'm gonna get mad, bro. So as you know, last night I was in a GBP JPY buy, and I told you guys that I might move price to break even, I might close out part of the trade. So I left the trade riding overnight. I woke up at about 7 o'clock and saw us dumping down, so I thought, let me just protect my position, move price to break even. We got stopped out and then we hit TP. If I left my TP, or if I left my stop loss was below this fair value gap here. So if I left my position, didn't go break even, I would have won. But this is just one of those times where you got to stay consistent with your rules. And my rules are, if I'm already up a decent amount of profit and price starts to reverse or looks like momentum is slowing down, I have to go break even to protect my capital, because protecting your capital is number one thing you should be doing in this game before trying to make more. You're going to end up losing a lot more money trying to chase money than you are if you actually secure what you already have, if that makes sense. Everyone wants to leave their trades open 24/7. Everyone wants to get those nice 6 RR trades. Everyone wants to see price go straight from their entry to TP, but sometimes it doesn't happen. And I saw a trader talk about this the other day. It was a very good analogy. It was, never let go of some for show money for some show money, or you'll end up having no money. And as a trader, I just broke that down as, don't try and post or keep trying to post or hold trades just so you can post, oh, I caught a 7 RR, I caught an 8 RR. Because a lot of the times, if you do that, you're going to miss out on closing out at 3 RR for some for sure money to try and show people that you're making 7 RR. And it's just one of those things you've got to stick to your rules. It's unfortunate, as this trade would have brought me to a nice point on my funded account, but it is what it is. The game is the game. So I'm just I'll log this on my trading log on Notion, and we'll get back to it, man. On GBP USD, however, though, we've had a nice push up above London session highs here. We've come back down to these London session highs, as you can see, which also lines up with this fair value gap. Boom, we're respecting this fair value gap. What I'm now looking for is between the hours of 3 and 4, I'm going to look for a simple silver bullet entry. First fair value gap to form here, hopefully get into something like this below these lows would be nice, and then take TP all the way up to potentially this buy side liquidity over here. Let me just mark this out. So this is what I'm going to be looking for today. However, I don't know if I will show you the results of this trade in this video, because I think this video is already going to be about 50 minutes and I need to upload Mastering the Markets episode 2. So thank you for watching. I hope you enjoyed seeing me take wins, take losses, anything I've done in this episode. Manners and respect, and I'll catch you back in episode 3, where I hope we can make some progress and get a payout on this funded account.